Have you ever watched a massive market move unfold from the sidelines, kicking yourself because you missed it yet again? Or worse, jumped in at precisely the wrong moment, only to see your position immediately reverse against you? That frustrating cycle of being too early, too late, or simply caught on the wrong side of the market is what separates amateur traders from the professionals who consistently profit year after year. Today, we're diving deep into the art of precision trading, the subtle skill that allows elite traders to enter positions with surgical accuracy and ride major trends from their earliest stages. This isn't about complicated indicators or secret formulas. It's about something far more powerful, the disciplined patience to wait for the perfect moment when everything aligns. Has this ever happened to you? You see a stock beginning to move, and that voice inside whispers, "Get in now before you miss it." So you jump in, only to watch the position immediately turn against you. That voice of impatience has emptied more trading accounts than any market crash ever could. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. What I'm about to share with you today completely transformed my approach to the markets. I discovered that you can't force profits from a market that isn't ready. The real secret is positioning yourself so that when the right moment arrives, you're prepared to act with absolute clarity and conviction. True precision isn't about guessing the next move. It's about being perfectly prepared when the signal finally presents itself. The most successful traders I've studied approach the market like master hunters, not frantic chasers. They don't run through the woods hoping to stumble upon their prey. Instead, they position themselves strategically and wait quietly until the opportunity walks directly into their sights. Stay with me until the end of this video, because what you're about to discover might completely change how you view trading forever. The trades you don't take, those impulsive, emotional entries that felt right in the moment, are often the ones that would have drained your capital. By learning to pass on mediocre setups, you preserve your ammunition for the opportunities that truly matter. What you're about to discover might surprise you. Trading less frequently actually leads to dramatically better results. Now imagine having the confidence to sit completely still while others around you frantically jump in and out of the market, watching your equity curve steadily climb as you make fewer but significantly more profitable trades. The masters of precision trading understand something crucial that most traders never grasp. Patience isn't just a virtue in trading, it's a position. If you're serious about mastering precision trading, hit that subscribe button now. I'm constantly sharing strategies that can transform your approach to the markets. It's what gives you an edge when everyone else is scrambling. When you cultivate this level of strategic patience, the transformation in your trading becomes undeniable. Here's what happens when you embrace trading less. You gain something infinitely more valuable than constant action. You gain insight. When you're not constantly jumping in and out of positions, your mind has the space to observe and truly analyze what's happening beneath the surface. This mental clarity reveals hidden truths about market behavior that most traders never see. Think about it. When you reduce your trading frequency, you create time to study each setup properly. You begin noticing the subtle patterns that precede major moves, how volume builds quietly days before a breakout, how price behaves around key levels, how certain stocks lead their sectors. These fine details, these whispered revelations from the market, are impossible to perceive when you're constantly distracted by the emotional roller coaster of frequent trading. The journey toward mastery isn't about more activity, it's about more awareness. I've watched countless traders fall into the trap of thinking that success comes from constant buying and selling. But behind the scenes of every great trading career, is the profound understanding that quality always trumps quantity. Your mindset needs to shift from how many trades can I take to how precisely can I execute the few trades that truly matter. This perspective doesn't just impact your results, it fundamentally changes your relationship with the market. Remember, your primary job isn't to make money, it's to protect the capital you already have. This might sound counterintuitive, but it's the foundation that supports everything else. Trading, less frequently, is another form of protection, perhaps the most powerful one. Every trade you avoid that doesn't meet your strict criteria isn't just preventing a potential loss, it's actively preserving your buying power for when the perfect setup arrives. The best traders I know manage risk before they even enter a position. Their first question isn't, how much can I make, but how much could I lose, and is this risk worth taking? This distinction seems subtle, but it represents a profound difference in approach that separates professionals from amateurs. The decisions you make about which trades to skip are often more important than the ones you take. Now, I want to go even deeper into this topic by examining what overtrading really signals about your psychology as a trader. Because once you understand the emotional drivers behind excessive trading, you can begin to recognize the warning signs in yourself. Write in the comments, "Patience is my position," if you've realized that sometimes the most profitable trading decision is to do nothing at all. Overtrading reveals something profound about your psychology as a trader that most people never realize. When you find yourself constantly entering and exiting positions, taking trade after trade with little pause between, what you're really experiencing isn't ambition or work ethic. It's uncertainty. This revelation transformed my own journey when I finally confronted it. Behind the scenes of excessive trading lies an uncomfortable truth. Traders who lack genuine conviction in their strategy compensate by increasing their activity. They're hoping that somehow, through sheer volume of trades, probability will eventually work in their favor. But this approach isn't trading. It's gambling with better lighting. It's the mindset of someone playing a numbers game rather than executing a proven edge. The impact of this realization can be startling. Think about your own trading patterns. Are you trading because you've identified a genuine edge where multiple factors align perfectly? Or are you trading to feel productive, to satisfy that nagging voice that says you should be doing something with your capital? Precision trading requires the courage to wait until all the elements speak the same language. Price action confirms your thesis, volume supports the move, and the broader market tone creates the perfect environment for your setup. When these elements converge, the probability of success rises dramatically. But this convergence is rare, which is precisely why patient traders outperform busy ones. This waiting period isn't passive, it's an active form of observation. You're not doing nothing, you're gathering intelligence, building confidence in your analysis, and preparing mentally for decisive action. This preparation phase separates the professionals from everyone else. Because here's the counterintuitive secret that changed everything in my trading. When you've waited patiently and finally see all conditions align perfectly, you must act with absolute conviction. No hesitation, no second guessing. This decisive moment demands complete commitment precisely because you've earned that conviction through patience and thorough analysis. The difference between a mediocre trader and an exceptional one often comes down to this pivotal moment of decision. The mediocre trader, having rushed through analysis, enters positions with doubt and exits at the first sign of trouble. The master trader, having done the difficult work of waiting and analyzing, executes with unwavering confidence and gives the position room to develop. This decisive action isn't recklessness. It's the natural culmination of disciplined patience. You move with conviction because your edge is clear, your analysis is complete, and the market is confirming your thesis. When I finally internalized this rhythm of patient observation followed by decisive action, I witnessed a complete transformation in my trading results. Let's examine how this principle of waiting for perfect alignment before taking decisive action manifests in the way professionals respond to market volatility. Drop "conviction follows patience" in the comments if you've noticed how your best trades came after periods of careful observation rather than impulsive action. When professionals face market volatility, they don't increase their trading frequency. They actually become more selective. This counterintuitive approach reveals another hidden benefit of trading less: heightened emotional awareness. The beauty of reducing your trading frequency is that it fundamentally changes your relationship with each position. Think about this revelation. When you trade constantly, you become emotionally numb to both wins and losses. Each trade starts to feel like just another number in an endless sequence. But there's a profound transformation that happens when you cut your trading volume by 80%. Suddenly, every trade carries genuine weight. You feel the importance of each decision, which triggers a cascade of positive behaviors. You begin planning each trade meticulously. You define your risk parameters with precision. You map out potential exit scenarios before entering. You monitor positions with complete attention rather than distraction. This level of care is impossible when juggling dozens of positions or making multiple trades daily. The clarity that emerges from this focused approach becomes your true edge in the market. Behind the scenes of every successful trading journey is this crucial insight. Emotional sharpness matters more than technical knowledge. Most traders have enough information to succeed. What they lack is the emotional framework to apply that knowledge effectively. The most illuminating discovery I made in my own evolution was understanding that most traders fail not from lack of information, but because they spread themselves too thin. Consider this perspective shift. What if, instead of taking 20 trades each month, you took only 5, but each one was chosen with surgical precision, each one representing your absolute best ideas? Your win rate might not improve overnight, but something far more valuable would develop: consistency. And consistency, that steady, reliable growth that compounds over time, is what ultimately builds wealth in trading. The illusion that activity equals progress keeps many traders trapped in a cycle of inconsistent results. Imagine the impact on your decision-making when every trade carries the weight of being one of your 5 monthly allocations. The quality of your analysis improves dramatically. You become ruthlessly selective, passing on dozens of mediocre setups to wait for the truly exceptional ones. This selectivity forces you to define your edge with unprecedented clarity. This journey toward quality over quantity isn't just about trading mechanics. It's about a fundamental identity shift. You stop seeing yourself as a high-volume participant and start viewing yourself as a precision specialist. The market begins responding differently because you're approaching it differently. Let's explore how this reduced trading frequency affects something equally crucial to your success: the preservation of your most precious trading resource, mental energy. Type "focus follows selectivity" in the comments if you've noticed how your concentration improves dramatically when you're working with fewer, higher quality trading setups. Every trade you take extracts a hidden cost that rarely appears on your P&L statement: mental energy. This revelation transformed my understanding of why even technically skilled traders burn out. Each position you enter, each decision you make, each emotional response you experience, they all drain a portion of your finite cognitive resources. This mental fatigue accumulates silently in the background of your trading journey. When you're constantly juggling multiple positions, your decision-making quality inevitably deteriorates. The evidence appears as subtle mistakes that compound over time. Missed stop-loss orders, impulsive entries at suboptimal prices, inconsistent position sizing, or premature exits from winning trades. These errors aren't random, they're the predictable symptoms of mental exhaustion. Precision trading offers a powerful antidote to this cognitive drain. By dramatically reducing your trading frequency, you maintain mental freshness throughout market hours and beyond. This clarity becomes your competitive advantage in a landscape where most participants are operating on depleted mental reserves. Instead of reacting to every price movement with diminished awareness, you observe the market with full attention. You analyze setups with complete focus. You wait for optimal conditions with genuine patience. This state of mental alertness allows you to notice subtle signals that exhausted traders miss entirely. The early signs of institutional accumulation, the change in character at key price levels, the shift in relative strength that precedes major moves. Ready to take your trading to the next level? Subscribe to the channel and join thousands of traders who are learning to spot high-probability setups before the crowd. The illumination that comes from this approach reveals perhaps the most counterintuitive truth in trading. The less you trade, the more you tend to make. This paradox confounds new traders, but makes perfect sense to veterans. By waiting exclusively for the cleanest setups, your trades naturally align with the market's own rhythm rather than fighting against it. Consider the profound shift in your relationship with the market when you stop trying to impose your will on price and instead harmonize with its natural flow. You enter positions with trends already established instead of trying to predict reversals. You exit with discipline based on predetermined criteria rather than emotional reactions. The result is a genuine harmony between your actions and the market's intentions. This alignment with market flow creates a transcendent trading experience, one where you no longer feel like you're battling an adversary, but rather dancing with a partner. Your entries feel effortless because they occur at points where the market is already moving in your anticipated direction. Your management decisions feel clear because they're based on objective criteria rather than fear or greed. Your exits feel appropriate because they honor both your analysis and the market's message. The wisdom in this approach isn't about trying to capture every move the market offers. It's about selectively participating only when conditions strongly favor your methodology. This selective engagement is how professionals sustain long-term success, while amateurs exhaust themselves chasing every opportunity. Let's explore how this precision approach helps you develop a completely different perspective on market movements, one that sees beyond the daily noise to identify the larger cycles and patterns that truly matter. Type "flow over force" in the comments if you've experienced that magical feeling when your trading aligns perfectly with the market's natural direction instead of fighting against it. When you trade less frequently, a remarkable transformation occurs in how you perceive market movements. The obsessive focus on minute-by-minute price action, the emotional roller coaster of watching every tick, begins to fade. In its place emerges a much more powerful perspective, the ability to see markets in terms of waves, cycles, and probabilities. This elevated viewpoint represents a fundamental evolution in your trading identity. You're no longer just a day-to-day speculator reacting to short-term noise. You've become a strategic market participant who understands the rhythmic nature of price movements across multiple time frames. This broader awareness doesn't just change how you trade, it changes how you think. The revelation that markets move in discernible patterns rather than random chaos is profoundly liberating. When you're constantly engaged in frequent trading, these patterns remain invisible to you, like trying to understand the shape of a mountain while standing on its slope. Step back, reduce your trading frequency, and suddenly the landscape reveals itself with striking clarity. This enlightened perspective allows you to recognize that opportunities aren't fleeting moments that must be captured instantly. They're recurring patterns that present themselves regularly to those patient enough to wait. The anxiety of potentially missing out dissolves when you truly internalize that the market will always offer another opportunity to those who remain disciplined and observant. Consider the profound wisdom in allowing opportunities to come to you rather than chasing after them. This passive strength, this willingness to wait until conditions align, perfectly defines the journey of every trader who transitions from struggling amateur to consistent professional. The noise that once dominated your decision-making gradually fades, replaced by a calm certainty about when action is truly warranted. This brings us to perhaps the most counterintuitive truth in trading psychology. Missing a move costs significantly less than forcing a bad trade. Every great trader throughout history has mastered the art of doing nothing, of sitting in cash for extended periods without feeling the compulsive itch to act. Their genuine edge isn't found in predicting the next move, but in recognizing the perfect moment to deploy capital with precision. The discomfort of watching a potential opportunity unfold without participating is temporary. The financial and psychological damage of forcing yourself into a suboptimal position can last for months or even permanently alter your trading trajectory. This distinction between temporary discomfort and lasting damage separates those who survive long-term from those who eventually exit the markets. Behind the scenes of professional trading is this uncomfortable truth. The discipline to remain inactive during uncertain conditions requires more genuine confidence than the courage to enter positions. Amateurs believe trading prowess is demonstrated through action. Professionals understand that selective inaction often reflects deeper market wisdom. The market rewards patience because it punishes impatience so severely. When you develop the inner security to wait calmly while others frantically chase every movement, you've cultivated something far more valuable than technical skill. You've developed the psychological foundation that makes technical skill effective. Let's examine the critical difference between defense and offense in trading strategy and why protecting your capital must always precede any attempt to multiply it. Write "cycles, not ticks" in the comments if you've discovered how stepping back from constant price action has revealed larger market patterns you couldn't see before. The most insidious threat to precision trading isn't found in technical analysis or market structure. It's that quiet voice inside your head that whispers, "I should have gotten in," after a move has already begun. This internal dialogue represents the greatest psychological trap in trading, the temptation to chase price after the optimal entry point has already passed. This revelation was a turning point in my development as a trader. I realized that acting on this whisper, this emotional response to seeing price move without me, inevitably led to entering positions based on FOMO rather than strategy. The transformation begins when you recognize this voice for what it truly is, the manifestation of impatience and ego, not rational analysis. Behind the scenes of almost every blown account is this pattern: seeing a stock move, feeling the emotional pull to participate. Regardless of your strategy, jumping in after the move has begun, and then watching your position immediately reverse. This painful sequence has emptied more trading accounts than any market crash ever could. The hidden truth that veterans understand is this: missing a move never ruins you financially. Taking the wrong one does. The psychological discomfort of watching from the sidelines as price moves without you is temporary. The financial damage of chasing suboptimal entries can be permanent. This distinction fundamentally changes how you approach the market. What if, instead of viewing trading success through the lens of capturing every move, you measured it by your ability to maintain control over your decision-making process? This perspective shift represents the journey from amateur to professional thinking. The professional doesn't fear missing opportunities. They fear losing control of their methodology. The enlightenment that comes with experience is understanding that trading isn't about reacting to every price movement. It's about waiting patiently for confirmation that your analysis is correct. The market doesn't reward those who guess earliest. It rewards those who enter with the highest probability of success. Consider the profound wisdom in this approach. The market offers countless opportunities every single day. These opportunities will continue tomorrow, next week, next month, and next year. But you only have one capital base. Once that's depleted, your participation in the game ends. This asymmetry, infinite opportunities versus finite capital, should fundamentally shape your decision-making framework. The revelation that control matters more than participation liberates you from the constant pressure to be involved. You no longer feel compelled to trade simply for the sake of activity. You develop the confidence to wait for setups that genuinely meet your criteria, not just those that temporarily satisfy your desire for action. Now, let's explore how balancing defensive and offensive elements in your strategy creates the foundation for sustainable trading success, and why protecting your capital must always precede any attempt to grow it. Comment, control beats FOMO. If you've ever experienced the freedom that comes from passing on a tempting but suboptimal trade only to find a much better opportunity shortly afterward. The most transformative revelation in my trading journey came when I finally understood the critical balance between defense and offense. Every great trader I've ever studied shares this fundamental philosophy. Defense protects your capital while accuracy multiplies it. This isn't just strategic advice, it's the cornerstone principle that determines whether you'll survive long enough to thrive. Most traders approach the market in reverse. They obsess over finding winning trades, discovering the perfect entry technique, or identifying the next explosive move. They focus entirely on offense, on scoring points, before they've built any defensive foundation. This sequence is precisely why so many promising traders ultimately fail despite possessing solid technical knowledge. The awakening comes when you truly internalize this truth. You cannot consistently make money in the markets until you've mastered how not to lose it. This mindset shift changes everything about how you approach trading. You begin seeing capital not just as money, but as ammunition in a long campaign. Once depleted, your accuracy, no matter how impressive, becomes completely irrelevant. Consider the profound impact of this perspective. Defense isn't about fear or hesitation, it's about respect for the battlefield you're operating on. It's acknowledging that no trader, regardless of skill, can predict every market move with certainty. This humility becomes your armor against the inevitable periods of volatility and uncertainty that all markets experience. The traders who survive decade after decade aren't necessarily the ones with the highest win rates or the most spectacular gains during bull markets. They're the ones who've mastered the art of capital preservation during challenging conditions. They understand that controlling risk isn't separate from making profits. It's the foundation that makes consistent profitability possible. This brings us to perhaps the most illuminating revelation about precision trading. Stop trying to predict where price will go and instead focus on confirmatory behavior. This distinction represents a complete paradigm shift in how you approach analysis. Instead of asking, "Where will this stock go tomorrow?" ask, "What is this stock telling me about its character right now?" Watch how stocks react after breaking through resistance. Do they hold their gains or immediately slip back? Observe their behavior during market weakness. Do they hold up better than their peers or immediately crumble? Notice the volume patterns that emerge during advances and declines. These behavioral clues reveal far more about future price movement than any prediction ever could. The journey from prediction to observation transforms your relationship with uncertainty. You no longer need to be right about direction before taking a position. You simply need to recognize the signals that indicate strength or weakness and then align your actions accordingly. Strong stocks act strong, weak stocks act weak. This simplicity contains profound trading wisdom. What's fascinating about this approach is how it synergizes with everything we've discussed about precision entries. When you focus on behavior rather than prediction, you naturally become more patient. You wait for confirmation before acting. You develop the discipline to sit through periods of ambiguity until character clearly reveals itself. Share. Behavior never lies in the comments if you've discovered how watching what a stock actually does reveals more than trying to guess what it might do. Next, this approach to trading isn't just about technical setups or indicators, it's about developing the rare psychological discipline that separates consistent professionals from the struggling majority. The market constantly tests not just your strategy, but your character. When you learn to wait patiently for the perfect setup and then act with complete conviction, you're not just trading differently, you're living differently. What we've explored today represents a complete paradigm shift for many traders, moving from prediction to observation, from constant activity to selective precision, from chasing to waiting. These transformations don't happen overnight. They're cultivated through practice, reinforced through experience, and eventually become second nature. I hope these insights have offered you a new perspective on how to approach the markets with greater clarity and confidence. If you found value in these principles, I'd love for you to join our growing community of precision traders. Subscribe to the channel if you're ready to dive deeper into these concepts in future videos. Drop "Precision is my edge" in the comments if these ideas resonated with you and you're committed to trading with greater selectivity and patience. Your comment helps me understand which topics are making the biggest impact. If you appreciated this approach to trading psychology, a simple like helps others discover this content too. It's a small action that makes a significant difference. I've put together a detailed video on risk management that pairs perfectly with today's discussion on precision entries. It explores exactly how to protect your capital even when your analysis isn't perfect. Click right there and continue exploring these essential trading principles with me.